In this demonstration problem about journalizing, we're going to use basically the same transactions we had recorded in Module 1 when we recorded these transactions in the matrix and using the accounting equation for each of the transactions. However, this time we're going to use this journal that we've provided to record the transactions on the next tab. The transactions are exactly the same transactions we saw before. We'll see how they're recorded using a journal. So here's the problem. On June 1st, 2000X, Billy B. opened a business, Billy Consulting, providing consultation services for computers for small businesses. The following transactions occurred in the first month. Record the transactions on the following page using the general journal provided. So we're going to discuss how we journalize transactions, use a little bit of the logic that we had discussed in our lecture about journalizing, and use the rules of debits and credits to keep the accounting equation in balance. And you'll see when we're all said and done here that we have recorded exactly the same transactions using this journal. And because of the rules of debits and credits, we will have kept our accounting equation in balance. Our first transaction is opened a business bank account with $20,000 from personal funds. Again, we've seen this before. Our owner is depositing $25,000 or $20,000 into our cash account in order to start the business. So, a couple things to note. Here's our journal. It's a general journal. We're on page 4 of our general journal. The first thing we're going to do is enter the date. Now, these particular transactions do not have a date associated with them, so we're going to use the letter to indicate the transaction. This is transaction A, and this particular transaction says we deposited cash. And our thought process is the first question, does it involve cash? Yes or no? The answer is yes. The second question is, are we getting cash or giving cash? And in this case, from a business perspective, we're getting cash. So we're increasing our cash account. And so we have to go to our little jingle and say, cash is an asset account, and we know from our jingle that assets are increased with debits. We also know from our lecture that our debit entry should be the first entry or the top entry, and we know that it's going to affect the cash account. So we're going to write on this line, cash is the account being debited. We're going to go over to the debit page, or debit column rather, and enter $20,000. Now we're going to come down to the next line, and we need a credit that goes with our debit. And we know from our first transaction in Module 1 that the other account that's affected here is the capital account of the owner, Billy B. And if we go to our jingle and we look at our rules, we know that capital accounts are increased with credit entries. So we're going to be okay by making this a credit entry. We are increasing the capital account. So we're going to put here Billy B. capital, and over in the credit column we're going to put the $20,000. Now in your book on the next line they include a description of this particular transaction. It might be something like initial contribution to the business, but for our purposes, for your test and homework, you don't need to include the description. We just skip that column, or that row rather, or that description. And in all of the transactions, I would really like you to skip a line between one transaction before starting the next. So we're going to leave this row blank, and we're going to go down here. I'm going to go ahead and put in transaction B here. And now let's go back and look and see what transaction B is. It says we purchased supplies on account for $1,200. Now, first question, does it involve cash? And the answer is no, it does not involve cash. So now we need to determine, well, what accounts does it affect? And what we're buying here are supplies. And we know that supplies are assets. And if we go to our jingle, we know that assets are increased by a debit entry. And so our first entry here is going to be a debit to supplies. The amount is $1,200. We move down to the next line and indent before we start our credit entry. And we bought these supplies not with cash, because it didn't involve cash. We bought these supplies on account. And our account involved here is accounts payable, which is a liability. And from our rules, we know that liabilities are increased with credit entries. And so it makes sense that this would be a credit to our accounts payable for $1,200. And just reviewing some of the rules we discussed in our lecture about journalizing and debits and credits, both of these entries have at least one debit and at least one credit. They have at least two accounts that are affected by the transaction. And in both cases, the total debit amount equals the total credit amount. So we have followed the general rules that we laid down in our lecture about journalizing. Now, transaction C says we received cash from services performed, $5,000. Well, we know the answer to the question is cash involved is yes, and again, we're getting cash, which is our debit, $5,000. And so we need to figure out what is our credit involved here. And when we perform services, it's our revenue account that's going to be increased, fees earned, and from our rules, we know that revenue accounts are indeed increased with a credit entry. So we are going to get our fees earned account recorded here, go over to the credit column and record the $5,000, skip a row and go down, and our next transaction will be transaction D, and let's go see what that transaction is all about. It says we paid rent on office space, $500. Okay. Does this involve cash? The answer is yes. Second question, are we getting cash or giving cash? And in this case, we are giving cash. And if you need to, go ahead and record that. We don't know what our debit is yet. We haven't figured that out, but we do know that our credit is to cash. And I'm going to go ahead and put that in here. And now we can go back and say, okay, what is the account that we're going to debit here? And we listed 4 possibilities in our lecture. And I know from experience that this happens to be one that involves expense, rent expense specifically. And so our debit, we know that expenses are, the category expense, are increased with debit entries from our jingle. And so our debit is $500 to rent expense. Let's look at transaction E. Transaction E says we paid creditors on account $750. And so to record this transaction, the first question is, does it involve cash? And the answer is yes. And once again, our cash is a credit entry. And I'm going to go ahead and record that. And when we pay our creditors, we had incurred a liability here for accounts payable of $1,200, and now we are paying part of that. We increased our liability account with a credit, and we're going to now decrease it, and that's done with a debit. So accounts payable, we're going to debit $750, and we now know have our transaction completed. Skip a line, and let's go see what transaction F looks like. F says we billed customers for services performed, $4,500. Now the first question is, does it involve cash? The answer here is no. And we know that when we provide services, our fees earned is increased, but we also know that fees earned is a credit entry, so we're looking for our debit entry here. And if we look at the possibilities we have for the accounts involved, we have debit possibilities would be to an asset account, to the drawing account, or to an expense account. Well, the asset account that is involved here is accounts receivable. And the amount was $4,500, I believe. And our credit is to fees earned, $4,500. Transaction G says we paid salaries to our office staff, $475. This is transaction G. We'll skip a line here. And when we are paying cash out, we know that's going to be a credit. We need to figure out what our debit is. And in this case, it's wages or salaries expense, and we use salaries here, and so we're going to call this salaries expense, and the amount was $475. Our credit is to cash for the amount that we are paying our employees, $475. Now, transaction H, we paid expenses for delivery truck maintenance, $150, and miscellaneous expenses, $75. Now, we did this transaction on the matrix with our accounting equation, and we said this was a specific kind of transaction called a compound entry. And the same holds true for journalizing. When we have a compound entry, we have more than two accounts that are involved here. And our accounts are going to be, first of all, we paid out cash, we have a truck maintenance expense, and we have a miscellaneous expense. And we know from our rules that expenses are debits, and when we pay out cash, that's going to be a credit. So transaction H is going to be truck expense, and we also have another debit to miscellaneous expense, and then our credit is to cash, and then I need to fill in my amounts. And I remember my miscellaneous expense was $75. My truck expense was, I believe, $150. Whoops, this account should go over here. Miscellaneous expense, $75. And my credit should be to cash for $225. Now, the fact that we have three accounts involved here makes it a compound entry. In this case, we have two entries to debit accounts and one to cash, which I recorded wrong. It's $225, not $22.50. My debits are $150 plus $75 for a total of $225, and my credit is $225. So the rule that my total dollar amount for debits must equal my total dollar amount for credits has been fulfilled here. We have at least one debit, in this case we have two, and at least one credit, in this case we have one, and this keeps our accounting equation in balance. My next transaction is transaction I, and let's go see what transaction I is. It says we took a physical count determining that the supplies on hand were $900. And we learned earlier how we calculate the expense involved here for supplies. We start out with $1,200 and we now have $900 on hand, and so what we don't have we assume has been used up. 1,200 minus 900 is $300 worth of our supplies have been used up. Now we know the amount. The question is, what are the accounts that we're going to debit and credit here? Well, if we think about it logically, supplies have been used up. Supplies are an asset account. Assets are increased with debits, and in this case we are decreasing our assets. So we're going to have a credit to our supplies account. So I'm going to move down a line and go put in our supplies credit, $300. And my debit is to an expense account, supplies expense, for the same $300. Now let's take a look at the next transaction. The next transaction is transaction J. It says received payment for services billed on account $2,000. So the question is, does it involve cash? And the answer here is yes, we just received $2,000. So this is transaction J. I'm going to debit my cash account. Anytime we receive cash, it's a debit for $2,000. And so the question remains is, what is the credit account involved here? And these were services we've already performed. We recorded them up here as accounts receivable and fees earned, and now people are paying part of this money to us. And so this asset that we had, this promise that people were going to pay us is now being reduced. And so when we reduce an asset account, it's a credit. Accounts receivable, credit, $2,000. And then finally, transaction K says that the owner withdrew cash for personal use, $600. Again, the answer to the cash question is yes, it does involve cash, but this time from a business perspective, we are giving cash, which means it's a credit. And so I'm going to go ahead and enter that down here, the $600 credit to cash. And so my debit account that goes along with this, anytime the owner takes money from the business, it's called a draw. And so we have the owner's drawing account, or Billy B. drawing. And if you look at the rules of debits and credits, we know that drawing accounts are increased with a debit entry, and so this makes sense. And we have at least one debit, at least one credit. Our debits equal our credits, and all is good. So this concludes our discussion, or our problem on demonstrating journalizing transactions. We will come back later and then track the balances in each of the accounts using T accounts that we discussed in our lecture. And then finally, we will post this information from our general journal into our general ledger. But before we do those two things, you need to review the textbook, read up on on posting rather, and we will come back and complete this problem after we've also lectured on that subject.